Hi, good evening, ladies and gentlemen. Thank you very much for joining us in this very relevant panel, I would say, and that's how it starts, remaining relevant in the current times and evolving regulatory, landscape that we are seeing. I think this is the time that we need to know where the mutual fund industry is headed. Of course, there's a long way to go, a lot of catching up if we compare ourselves with the other nations, but I think the Sahi Hai, mutual fund Sahi Hai has done its bit in a good way. And clearly everybody now understands what it is and they explore and they are trying to get into that, investment setup. The way it has been designed, as we were discussing before this panel started, that, there are no frauds or there's no scope for any frauds in this. And hence, I think it becomes more easy for people to understand this and make the best use of this instrument that's for people to come and save. Important investment design tool for Indians. How do we get better from here? And as you know, all the big names, the key marquee names are here with me, the perfect experts in this space who will give their own views about it. And I'm looking forward to understanding. And of course, we have Mr. Manoj Kumar, who's representing, and from the regulatory perspective, I think it's very, very, it's a rare panel because we have the regulator and the industry together sitting and discussing this. Thank you so much, sir.
Only the lone voice, huh? The only regulator.
Yes, the only regulator. So that makes it more interesting. Okay, let me actually open with you to begin with, sir. With all the regulations that have come about so far, and there is constant work that's still being done, obviously to facilitate, to make this industry more robust, more transparent, fair, and so on and so forth. So let's understand from you the recent regulations that have been brought in, the kind of response that you're getting, and some of the more relevant reforms that we can expect, or the direction that SEBI is working. Can you give us some insights into it?
Yeah, thank you very much. And see, as a regulator, we are not used to opening. We always reserve ourselves to give our final comments because I think that's the only limited prerogative we have as a regulator. Since you have asked for existing regulatory framework, which I am sure that we are in a very good company of experts and practitioners who are more expert than me to tell you about what is the existing regulatory landscape and how it is faring and delivering to the investor requirement. But as far as ongoing process is concerned, yes, because this entire industry is dynamic and you guys are extremely expert in designing things in such a fashion that it may come below the regulatory radar or it may go above the regulatory radar. So as a regulator, we have to constantly fine-tune ourselves. But when I mention about this, if you notice that in recent past, we have done a very significant change as far as our regulatory thought process is concerned. We have become more collaborative in nature. Sure. It is not that earlier we were not discussing. We were discussing earlier also. Today, our discussion is more intensive with the market participants. That is one. Second is that our focus is to see that we as a regulator and you as an industry should be able to more proactively adopt technology because all of us believe that once we take help of the technology, probably it will benefit the investor in terms of cost reduction, etc., and efficiency. So these are the two core focuses. And over and above, you would have heard our chairperson regularly when she talks in this type of forum that we have become completely data driven. So if there is a data point which is contrary to our thought process, we will not go ahead with the regulatory framework. If there is a data which supports us, we will definitely create a regulatory framework surrounding that data point. So these three aspects are very, very critical for having a regulatory setup, regulatory framework, which is fine-tuned to the interest of the industry as well as the investor.
Okay, fair enough, sir. So clearly, very focused, data-driven, collaborative approach, as you talked about, fair and transparency. And actually, it has to be a win-win. You know, at the end of it, the investors should not suffer. That regulator has to always keep in mind. And I think it's a fair job being done on that side. But let me now bring in all the other panelists, because they will throw light in the sector since they have their skin in the game. Mr. Singh, let me start with you to get a sense of, you know, the fact that there is a recognition, this is an instrument, there is an increasing number of people getting into it, but you know, we have a long way to go. What we've seen during COVID was a great opportunity for companies to have, like yours, to see that people were ready to come and invest in, and they found this as a great instrument because you spread the awareness, or the industry spread the awareness very well. Do you see that momentum continuing now when the markets have again started to sort of show some volatility, and you know, things are not as good and rosy as, let's say, they were? So how are you sustaining that momentum is my question to you.
Yeah, thank you very much. And first and foremost, yes, during the COVID period, there was an opportunity to educate people more, and people had time to understand the things, so that definitely brought in a lot of investors. But when we look at the numbers today, the data points say something different, in the sense that most of the flows which are coming today are coming from the same investors. New investors are not getting in, and when we talk about the penetration is still very, very low, and the new investors coming in is still a challenge. This could be because at the low ticket size, it's not becoming an economically viable solution for the intermediary. Mutual funds continue to be B2B product, not B2C as of now, though B2C is increasing, but it's increasing very, very gradually. But see, the issue is how to get more number of investors into the firm. That's a challenge. But second, see, as we were discussing earlier also, the mutual fund CII campaign has done wonders. But now it has to be taken to the next level. Kiske liye kya sahi hai? That is something the very, very
very
approach,
pointed.
Very
that will be pointed
approach towards the investor. What is the need of the investor, and what is the risk appetite?
Okay.
That is something which is a very big responsibility and accountability of the fund houses.
Sure.
That we have to work on.
Fair enough. So you're saying that there are new investors, you are facing challenges, existing people are there. Well, they themselves become testimony that if the existing ones continue to invest, I think you have an opportunity to maybe convince the ones that are not yet entering into it. But sir, you know, if you don't mind, I'll keep coming back to you. The fact that cost of investments for people to get into it, that has to be brought down. And I think one of the areas that the regulator has been trying to work and convince the industry is also to do that. And that automatically will help in the volumes that we are talking about. So what's your view on that? Do you think it's still high and that they need to rationalize?
See, you have touched a very sensitive topic at the very beginning. See, I cannot comment what is high, what is low. But what as a regulator we are always focused is that whatever benefits industry is gaining because of the experience over a period of time, and the efficiencies which they built into the system over a period of time, that should be passed on to the customer. That is the focus. And from that perspective, if you notice that we regularly try to do an exercise where we try to see that whatever cost structure is prevalent, how best it can be rationalized. And from that perspective, even the recent exercise which is happening, that is nothing abnormal. It is fairly normal. We do it regularly on a periodic basis, and that's why this time you would have noticed that we are slightly different in the sense that we know that there is a lot of speculation surrounding this entire issue. That's why for the first time you would have noticed that we have issued an appropriate press release for the market, so that market should be fully aware that as a regulator we are doing it. And once I say that we are doing it, it is not solely we as a regulator, but we are interacting, and many rounds of interactions have already happened with the industry body. And shortly you will see that we will come out with a very elaborate consultative paper. And based on that consultation with the industry, we will decide that what we have to do with the cost structure, whether cost structure has to be lowered, rationalized. All this depend, as I mentioned, that we are now data driven and
Okay, so I get a sense, sir, that you're saying there could be some rationalization in the cost that you feel basis what. Of course, the paper will examine that and give us more details on it. Radhika, your inputs and take on how things have been for the industry so far, and how is this year looking in terms of the growth that we are talking of? Again, opportunity is immense. Are we tapping just the tip of the iceberg so far?
So I think I want to make 3 points. One DP already touched upon is that if you look at the current investor base at 3.5 odd crores, mutual fund AUM still accounts for about 16% of GDP. Now, the global average of this number, if I'm not wrong, is close to 40%. So, structurally, as India moves to a $5 trillion economy, all managed investment classes will grow. And so there is no reason to believe that there will not be structural growth of the mutual fund industry in a country where savings rate is as high as India. And I think the one thing that is tested is that the regulatory framework makes mutual funds a very strong and reliable product. The ability to know exactly what you are getting, to redeem in 2 days without any hassle, and to get your money back, to have such variety on one platform, I think is underrated. I think the second thing that has stood the test of time is the 14,000 crore SIP book that we have today. I remember when I joined the industry in 2017, not that long ago, this book size was 4,000 crores, and every market correction one periodically hears, oh, SIPs will disappear, book will become smaller, etc. And while the book has not grown linearly, I think, 14,000 crores is not a small number. In fact, I met a global investor a few days ago, and I was talking about this SIP book, and he said, it's incredible, but I have 2 questions. He said, is this driven by a 401k kind of movement? And I said, no. And he says, do SIPs have any special tax incentive? And I said, no, not really. And he said, it's genuine retail savings. And I think that is something the industry and all of us must be commended for. The third thing is, I think as far as the road forward, we have all the products. We need to show use cases for a different set of investors. For instance, if you look at women investors, I still believe it's an incredibly untapped opportunity. I met a woman 2 days ago who earns about 1.5 lakhs a month, a meaningful salary, and has a total savings of 3,000 rupees because everything that comes to her bank account is taken away by the man of the household. We started an SIP for her, and it was never about returns and instrument. It was just the fact that the SIP allowed the money to go from her bank account into an investment in her name before it was taken away by someone else. And I can tell you she's not the only woman in India with this problem. So I think we have the products. We need to build use cases for different kind of investors.
Absolutely. I think innovation in that sense is something that can be used to really grow this industry, and case in point that you talked about. Mr. Rahman, your take again on this, and after that I will come again, sir, to you to understand. But your sense of how you are seeing growth and what's been your company's, projection, let's say, to see the kind of opportunity you will get in the coming year.
Thank you, Swati. This panel discussion is the most difficult things to do for me. I'm a karma yogi, I love to work. Well, let me give you a perspective first of all. Let me tell you how the mutual fund came into existence. That will give a lot of perspective here. In the 1963 December, then Finance Minister, Mr. T.T. Krishnamachari, in the Parliament, he said, it's not about UTI, it's about the units. unit trust would be open to any person or institutions to purchase the units offered by the trust. However, this institution, this talks about the UTI, this institution, as we see, it is intended to cater to the needs of the individual investors and even among them, as far as possible, to those whose means are small. I think the last 60 years, mutual fund industry, so there are various phases, right? From 1963 to 1992, there was only one company, one organization, then public sector came in, private sector came in. I think we have seen this serious transformations. There, we used to follow the Unit Trust of India Act, our accounting standards, the Unit Trust of India Act. Now we have got a fully SEBI compliant organizations. So from 1 to 43 companies, from none to 40 lakhs crore of AUM. Regulatory frameworks, robust. After every strong steps which SEBI took, the industry grew. One, entry load finished, industry grew. Direct plan came in, industry grew, and the industry is growing. So my take is, and I cannot give you anything about my company's perspective, I'm part of a listed company, so I cannot speak on that. I think I'm seeing the serious future here. The only thing which I would like to tell to my team of mutual fund industry, we need to stop selling this product as an investment product. Problem is, लोग पूछते हैं कितना मिलेगा? This is not the Maruti car, कितना देगी? So we have to be very careful. Since we are selling it as an investment return product, people is asking कितना मिलेगा? But it's a great potential to save. Let me give my own example. I am part of Unit Trust of India, so many years back my salary was 26,000 rupees, right, as a senior vice president. Plus home, beautiful home to live. I have a wonderful daughter, so I started saving money, 500 rupees, 1,000 rupees. When the time came for admission, I had 30 lakhs rupees. Wow. I have a son, he's a student of year 2 in Jindal. I started saving for him. His investment account has 40 lakhs rupees. That's the power of compounding. I would say, I will rest my case here, that we need to apply physics here. And the law of power of compounding is the most important power, which we as the mutual fund industry do use it. Last but not the least, I always say to my team in UTI, I will take back UTI to the 1994. They all feel the idiot CEO, he is a regressive CEO, he wants to take the company back. In the 1994, we have all types of product in Unit Trust of India, serving the nation across the length and breadth of the country, and we have 5.5 lakh unit holding account. That was the potential then, and the future is very bright.
All right, sir. Very interesting and important points that you made. Future is bright indeed, and there is so much scope. 40 lakh crore rupees AUM for the industry. Where is US today? I was talking to Mr. Nanavati and we're discussing these numbers in that context. And let me come to you, Mr. Nanavati, to get your comments on, the race is just started, we would say. And Mr. Rahman said we should not look at it as an investment, but look at it as savings. How would you define compounding? The power of compounding, as you talked. So what's your sense, and how do you see the industry grow? What will be its growth levers, according to you?
So look, I think Mr. Rahman covered very relevant points as well as DP. I think we are at a tipping point, and I'll give you the reason. I've said this many a times in many other forums. But when does that tipping point actually come? And if you just look at global statistics, India's per capita income is $2,000. As a comparison, I think US is $60,000 US. China is $11,000 US. So Once you cross this $2,000 mark, every incremental dollar actually goes either into consumption, which is good for capital markets, or it goes into savings. So if hypothetically Chinese are basically earning 11,000, chances are 9,000 is going into consumption and savings. Now look at the numbers in the past few years. We are $500 billion industry, 40 lakh crore divided by 82. Chinese asset management industry is 6 trillion. It's 12x. What was our inflow the last year in the mutual fund industry? Actual inflow in the whole year. It was $10 billion, around 80,000 crores roughly for the whole year. Last year was the worst year in China in many, many years. The total inflow in the mutual fund industry in China was $220 billion. It was down by 50% from previous years. So actually in 2015, 16, 17, 18, 19, 20, China added one India every year. So what we have toiled for 40 years, they have been adding one India every year for the last 4-5 years. And I think we are coming to that tipping point that in the next 7-8 years, if this $2,000 goes up meaningfully, then you will see a massive growth in consumption. Again, one statistic which we were discussing was that last year was the best year for BMW in India. They sold 8,800 BMWs. Do you know how many BMWs they sold in China last year? 8 lakh. 8 lakh BMWs. That's the scale which we are talking about. So we are at a tipping point. Look, structurally, I think the next 7-8 years should be the most exciting for this industry because you have an equity market which is yet giving you a 12-15% return. So your AUM anyways doubles every 5 years. And then you have an investor base which is just 3 crores versus China, that number is anywhere between 30 to 60 crores. So, on both those counts, you really have a long way to go, and you are at the right time, at the right spot at this point of time from an industry standpoint. We just need to take care of the basics and be resilient as an industry. I think our resilience was really tested during the COVID period. A lot of us don't realize this, but in 2020 Jan, if somebody would have come and asked me that, can you operate from home? How many days can you operate from home? And I would have said maybe 1 day, right? This industry operated from home for 2 years. 2 years, yeah. All redemptions, all subscriptions were processed on time. And the industry grew during this period. So this industry is amazingly resilient. Sure. And let's take it to the next level.
Okay, so taking it to the next level, we have all the reasons to believe it will, we are at the tipping point as you talked about. Sir, I'll come back to you. As I said, couple of things. One, when we look at ourselves in India versus many of the matured economies, the best practices that we are trying to, of course, bring into our industry, there's that constant evolution, but some things that you think we need to address, that you would like to maybe talk about, maybe a forum where the industry takes the cue and starts working in that direction, things that the regulator feels can be done for better practices. Are there some of those concerns that you would like to highlight?
Yeah, absolutely. This is very relevant issue for the regulator. While we benchmark ourselves with the global best practices, but if you notice that recent episodes which have happened, we have clearly seen that our industry is better placed as compared to any industry. So now probably time has come for us to create our own standards and benchmarks rather than following or benchmarking ourselves with global best practices. And in line with that direction, we are very closely working with MFI as well as the industry. We are requesting MFI, and MFI is almost ready with a roadmap for entire mutual fund industry, which they are calling MFI 2.0, which they are discussing, and there will be more structured approach, because if you notice that in recent past, as a regulator, we have become more structured in our approach. Rather than acting on the basis of our intuition, normally regulators act, we are more data-driven, we are more process-driven, more structure-driven. So that is what we expect from the industry, and MFI is the right forum for that. And we are very thankful to MFI that they are working in that direction. Number two, which we are trying to ensure and trying to encourage the industry, is that they should start regulating themselves. And in that direction, we have already started very extensive interaction. There are various MFI committees and many individuals who are sitting in this hall, they are interacting with us, where we are saying that you are more closer to the market than the regulator. We get secondary data, you get primary information and primary alerts. So you are better placed to take cognizance of those alerts, those practices, and take action, rather than regulator coming and taking action. So this is one core area where we are very keen, and we are very happy that proactively industry has responded. What Rahman Saab was saying, that whenever we do any reforms, those reforms take industry to the next level. So this is one area where we are working with the industry, and we are very sure that very soon you will hear from a regulatory side as well as from the industry side that how a new best practice standard has been created surrounding the self-regulation of this industry. While self-regulation, I am not meaning that there is going to be any structural change. By self-regulation, what I am suggesting is all AMCs will enhance their capability to monitor the entire market on their own, rather than regulator coming into picture and then taking some actions.
Okay, fair enough, sir. And self-regulation is something that you've elaborated and talked about. The industry is geared up, that's good to know, to take this upon them. I'll come to a second question in a bit, but let me go to Mr. Ramakrishnan and get your views, sir, on the industry. A lot has been talked about already. What is the future? There's no doubt and dearth of opportunity that India throws. But in terms of being innovative, in terms of penetrating more, as we just discussed, what are your own thoughts and ideas, sir? How do we grow from here?
As some of our panel members rightly put it, it's still, mutual fund has still only touched the surface of the potential that is available. I think we may have to do something like a Janadhan for mutual fund.
Okay.
I mean, at one go, spread it across. See, in fact, during the beginning, I think the AMFI CEO was mentioning that there are 45 crore PAN numbers in India, and 8 crore people are filing their returns. We don't even touch that 8 CR so far. Forget 45 CR. So we will have to work on two fronts. One is on the urban side, those who understand it, those who are already, and how to add more value to them. At the same time, do more penetration, say in the B30 kind of segment, especially for people for whom actually mutual fund is quite new. I think we may have to be very innovative on that kind of a thing. Maybe the regulator, AMFI, all the AMCs put together will have to do deep thinking on how to do a Janadhan for the mutual fund.
Okay, you've given a name to it, Janadhan kind of a thing that we are talking of. But B30, sir, coming to that, now the regulator decided to, let go of it, while the industry clearly feels that perhaps it has its own merit. What's your thought, sir, and do you see any revisiting that thought? Also, in terms of performance, when you're talking of mis-selling, there are, of course, enough rules and ways to clamp that down. But what about companies or mutual funds that are giving good returns than the benchmark? Do you think there's a room and scope for maybe better incentives for them? Because then it becomes a win-win, isn't it?
We have not done away with the B30, right? What we have done is we have suspended B30, and there is a reason for that. Based on our internal examinations, because we frequently not only interact with the industry, but we go as a regulator to examine the industry. So based on that examination, we have come across certain practices which are not desirable to continue with this type of incentive structure. So we are revamping that structure. We have already told MP that you have extensive dialogue with your participants, and based on that dialogue, you make a suggestion to us. If MP does it, well and good. If they are not able to do that, we are already on our way to create some structure which will be far superior than the present structure, and it will not have any challenges surrounding mis-selling, etc. So industry should be rest assured that the new structure which we will propose, that will be far better, far superior, and far more inclusive, because the idea was that we should reach nooks and corners of the country rather than sitting only in Mumbai, and that is what we want to achieve. And what was your second question?
Sir, better incentives for better performers.
Yeah, that is another core idea which we are trying to focus, and shortly you will see once we come out with the consultation paper, where we will try to link performance and try to see that surrounding that performance, what incentive structure we can create. And what we are doing is that not only performance in terms of some incentive, etc., but we are also looking into a new concept of creating some MF light framework, because we have certain expectation from the industry. Similarly, industry has certain expectation from us, that whether the entire process as it stands today, can it be simplified? Of course, yes, it can be simplified. Whether during the process of simplification, we can do away with certain requirements. Yes, we can relax certain requirements, and we are very actively working on that. And in that issue also, we are soliciting many suggestions and feedback from the industry. So probably you will soon hear from us that we will create some MF light structure which will more fine-tuned and for the betterment of the industry.
Okay, so clearly lots of things that are coming in, and as sir said, very busy trying to collaborate better in the industry.
Yeah, in fact, there, as I mentioned earlier, that a lot of regulatory structural changes have taken place.
Yes.
So probably industries KRA are less as compared to our KRAs. So we have very, very, very tight KRAs, and that's why often you will find a heat getting generated on the industry, because we have our KRAs to meet. So we cannot meet our KRAs unless you cooperate with us.
Okay, since we have this opportunity, and I think Mr. Kumar has been very candid and kind to take inputs from the industry, why don't we get you guys also to perhaps ask a regulator a question? And I think it's a good forum to, sir, if you don't mind.
We are very transparent and open regulator, but industry as a whole is already interacting with
Yes.
us. I don't have any issues if industry has any questions.
Yeah, so on the panel, sir, Mr. Rahman.
Sir, first time I am seeing that a regulator is speaking so much in a panel discussions.
Yes.
And thank you for opening up. Sir, let me make a suggestion to you, sir. And this I have just copied from our former boss article, which just came in, Mr. Damodharan. I haven't had a fortune to work with him for many years. He wrote, and he has just quoted, Lord Alverstone, Chief Justice 100 years ago, in his address to the jury, has stated that auditor is not supposed to be a man constantly going about suspecting other people doing wrong. If circumstances of suspicion arise, it is the duty of the auditor, insofar as those circumstances relate to the financial positions of the company, to probe them to the bottom. Sir, B30 incentive became the victim of suspicions. So that dual role is there. We as an industry player, it is our duty to ensure that we do not create any circumstances which lead to the suspicions. But sir, we can't paint the same brush all the companies. And the data shows, sir, that we need support from a regulator. You have highlighted that, yes, new framework is coming up and it will be open for discussions. But sir, the industry needs a continuous support to go and take the mutual fund as a concept forward to the nook and every corner of the country. I am from a village, so I understand the pulse of a village. Traveling to one place to another is extremely difficult. And so far, and you know, period after period, the TER has under serious pressure. So they're very difficult for an asset management company to take this particular strategy or mission forward. So I would sincerely suggest you that pause has a limitations, right? It cannot be permanently paused. So therefore, you need to look into this particular aspect as early as possible. This is my request to you, sir.
Yeah. Thank you very much, Raman Sahab. You mentioned the name of one gentleman, Mr. Damodaran. So I have also worked very closely with him. So I have learned many things from him, the way you have acquired many positive traits. See, we have, I was not interested to highlight this, but if you see that how fast we work, is we gave MP 30 days time to come back to us. But those 30 days have become more than 60 days. They have not come back to us. We believe that it is in the interest of industry that industry should come forward and tell us that what is the better way. We are all with you. We are with industry as a regulator. There is no intent on the part of regulator to do away with this B30 incentive. We will have a better incentive scheme which will really result into inclusion, and we are very mindful of that fact. Swati mentioned about some Jandan. So I am sure, I am not able to see the MP chairman here, but he has something in mind similar to Jandan, and I don't want to steal the thunder from him. He will at appropriate time announce the scheme which is far, far superior, and it will ensure that we should be able to reach every nook and corner of this country.
So penetration being addressed through a scheme, sir. So there is a scheme coming, surely there's something that the regulator is cognizant of. Let me get Saurabh, if you have any concerns, suggestions for the regulator, which you can put across maybe in this forum. Sir is happy to take inputs as a collaborative approach he's talked about. Mr. Singh, you would want to?
I don't have any question, but I will definitely appreciate what Mr. Manoj Kumar is saying. They are much more transparent. They are discussing and see some of very, very good things are happening. And the latest being, when we launch a fund, earlier there used to be 7 days. It has recently been done, last week only, that it will be brought down to 2 days. So many good things are happening, and we were thankful to SEBI for that.
Okay.
And this will definitely improve the productivity, improve the penetration. And I'm sure, I am preview of some of the discussions which have happened. The scheme which SEBI will come out with be much, much more inclusive than it was earlier. I think we'll have some patience and we'll look for that.
Radhika, you would want to?
No questions. I think I just want to, one, elaborate on the point that DP made, is that ease of doing business in many ways is getting better. I had made this comment to Chairperson also. The second is, I just want to emphasize one point as feedback is that as we think about growing the investor base, it is very important to think about growing the distribution base, of course, in a responsible way, while distributors are doing right practices, because if we do want to reach every nook and corner of the country, I think incentivizing distributors who are doing good work is important. We recently did a report at Edelweiss Mutual Fund called the COGS, where we studied the behavior of assets that came in via distribution versus D2C assets without making a comment. And one of the observations that we had was that if you look at money that stayed over 2 years, more than 2 years, since Raman sir talked about the power of compounding, assets that were backed by an advisor, that was 30% versus 14% for the direct plan. So there is a merit in financial advice, in the power of distribution, and if we want to reach the nook and corner, AMFI has already done MFD Kare Shuru, AMFI is doing its bit, but I think this is an area that we can continue to work on as industry.
No, I am taking this suggestion positively, and we will definitely have more intensive interaction, and we will frame a scheme which is far, far superior, and including taking care of the distributors.
Sure. Now coming to the industry and the way it's grown and the size and the scale we're talking about with so much competition also, I think that we need to also understand the online and the tech growth with so many apps that have also come in. Sir, I'll ask your take on it as well, but let me get Saurabh inputs first to say the competition that we are seeing through so many other companies that are coming in. You think consolidation is the way forward? And what's going to happen really? Because for a consumer, there are so many funds and so many options. How does he choose and how does he, understand this better?
Let me answer this question from a relevance perspective. So if you would have asked me this question 5 years back, that what do you want this industry, in say the year 2016 or 17, that where do you see it the next 5 years? That point of time, our debt AUM was higher than equity. So we wanted more equity investors. We wanted more retail investors, because again, I think institutional AUM was around 60%, retail was 40%. Now it's exactly flipped. We wanted more number of investors. At that point of time, I would have had basically said that digital will be a good, this initiative which for the next 5 years we all need to focus on. I think if you see after 5 years, all those things have happened. So what is it now from here on which will take us to the next 5 years? So my sense is, I think, besides whatever else we are doing, and we all know, active, passive, digital, all those aspects. But I think three things, which come to my mind immediately is, one, I think technology. I think it's extremely critical to reinvent the organization and the way we are working. Technology, whether it's in fund management, it's in our operations, or how we communicate with clients, I think is going to be the most important factor for the next 5 years. Second aspect is data management. I think we are dealing with lots of data, client-specific data. I think given the regulations and the way we are structured as an industry, the kind of data which we have today is just amazing. Earlier in the year 2010, you never knew. There's a small thing which was introduced in the form that what is your income bucket, which wasn't there. Now today I exactly know who is the 2 to 5 lakh, 5 to 10 lakh, over 10 lakh, over 1 crore.
Yeah.
And basis that, I am basically doing a lot of internal, data management, reaching out to clients in that fashion, and customizing my products and my whole market approach on that. So that is the second aspect. Technology first, data management. The third aspect I would basically put in is the whole digital approach. 2010, would you have ever been able to imagine that you can change your nomination or any other name change or whatever? It would have taken 10 days, 15 days. Right now it's happening in seconds. We have reached that point. Now everything has to happen instantly. And how we can enable that to happen instantly, and what will be our experience with the client, that whole client engagement, through the digital medium, I think will be the most important thing. So if I have to basically look at the next 5 years, these would be the 3 areas as a CEO of a business I would focus on.
Sure.
Because the business has changed completely. And I need these 3 to be in place for me to go from 3 crore investors in the mutual fund industry to 30 crores.
Yeah, so tech is the play and the way to look at it. But sir, how much of a botheration or a concern, I would say, is it for you to monitor and also to keep these new companies that keep cropping up And through digital, I mean, while it has its own positives, they also tend to sometimes mislead people. How do you clamp down on such things? What is the regulator's role and thought around that?
So, most important thing which we have adopted is that we now have technological vertical in each and every department of SEBI. Earlier we were structured in a fashion where we were having a consolidated IT department like any other entity, but today each and every vertical department of SEBI is having a technology vertical, and the job of that technology vertical is to keep a very close eye on what is happening in the technological field. For example, the investment management department which I come from, it has a vertical. Their role is to facilitate ease of onboarding. Their role is to see that where we can reduce the time in processing, where we can facilitate industry to be more proactive in dealing with investor issues. So this is how we are trying to keep pace with the industry, and that is what we are expecting from the industry also. And we have already requested MFI that you should also gear up yourself to respond to our regulatory needs, because whenever we need some information, it should not take 10 days or 15 days or month. We need information very quickly, what Saurabh has just indicated, the way, and that's why we are able to process things. Today, if redemption happens, it happens very quickly. Money goes to the customer very fast. So this is how we are fine-tuning ourselves, and we are after the industry. Here I can use this word, that they have to also constantly follow, because sometimes they come to us and they say this is not possible. We say no, don't take 3 months to do it. We expect you to do it in 1 month. And when we say this, we ourselves are geared up to take up things like this. And one or two issues which I don't want to highlight here, we are closely chasing the industry. We are saying that you please come back with proper back testing, etc., because we want to move very quickly on this issue, and huge concession we have in mind, which we will going to provide to the industry on that aspect.
Fantastic. Okay, so that's heartening to know. Industry needs to now speed up. That's the regulator's voice coming in. Brilliant. Thank you so much, sir, and all the panelists for being here and discussing some of the very interesting, pertinent points, which tells us there's a future which is very bright for the sector, and some of the big changes sir was highlighting, not of course disclosing them as yet, but there's enough and more that's coming for the sector and the industry, which is only going to take it higher. Thank you very much for being such lovely audience as well. Thank you.